Hello friends, this is a three-part series on inventory optimization wherein I am covering the functionalities or rather the basic functionalities of inventory optimization broadly into three separate videos. In the current video, I am going to focus on the primary or the mandatory master data that are needed for inventory optimization like location product, location source, demand stream. What are the primarily input key figures for inventory optimization and how to set up a inventory optimization profile setup along with some other terminologies like PBR and how it affects the overall inventory optimization run. So to begin with, I will take you to the master data wherein you see I have just loaded a small subset of master data which are product, location product, demand stream, and there is one custom master data called product style, class and owner. So before I jump in, the first and foremost master data that we need to focus on is location product. In location product, there are multiple fields or attributes available and each of them has its own relevance. Some are useful for supply planning, whereas some are used for inventory optimization, and some can be utilized for DDMRP, and some can be utilized for all the three modules like demand, supply, and inventory optimization. Now, in a location product master, you will come across many attributes out of which there are few attributes that are of utmost importance and which are needed in order to set up inventory optimization properly. And one of the main input or attribute for inventory optimization is called the stock node type. So if we look into this attribute, the stock node type, this attribute can have a preferred value of S or N, where S means a particular product location combination is considered to be a safety stock planned location, and if it is maintained as S, inventory optimization based on demand and certain other criteria will recommend safety stock either in quantities or days. Whereas if a stock node type indicator is marked as N, then in that case, even though we might have demand or direct customer demand, or even we are having propagated demand through transportation lane from other location, the system will consider this demand but it will not plan any safety stock for that particular combination. Hence, stock node type is one of the most important attribute of inventory optimization. Now, how to determine whether a product location combination would be stocking or not? This rule varies from company to company and from process to process. But a general thumb rule is, if you see, we generally don't tend to keep safety stock at manufacturing locations. So hence by default, we mark product location combination where the location is a manufacturing location as N with an objective that I will not store safety stock in those locations. Whereas any DCs or remote DCs which directly replenishes to customer or from where we get direct customer demand. For those kind of disease, it is very important for us to maintain safety stock, and for those we generally maintain safety stock node as S, meaning that I should be planning safety stock for that. So this is one of the very important attribute for safety stock planning. Apart from that, there are other fields like safety stock policy indicator, service level type indicator that has its own relevance. But if you leave it blank, then it basically takes certain default value into account. And if you ask me to be very honest, different types, although there are different inputs here, but the quantum of change in safety stock by changing these inputs are to some extent negligible. For example, safety stock policy indicator could be first in first out or normalized. So whether you select first in first out or normalized, if you keep it blank, the first in first out method is selected. Even if you select normalize, in that case it plans for the fill rate. So that is the reason we generally tend to keep this field blank, because during an implementation we want to start the implementation with a simplistic master data, and then we add further complexities to it and to see how the safety stock optimization is behaving and how at a particular product location combination we are getting recommended safety stock. So these are the two things that I just wanted to cover, but one important thing is stock node type indicator is very important. Now after the stock node indicator is gone, then comes period between replenishment. Period between replenishment is a very important aspect. Now what is period between replenishment? Before I go that, one thumb rule is that we need to understand is, if my PBR is high, my recommended safety stock for a particular location is high. Now, period between replenishment in a way is not related to transportation lead time, although most of the time it gets confused with the lead time. PBR, what PBR says to me is, how frequently can I place a order for a particular location to its destination? So in a way, even if for a source to destination I have a 5 weeks of lead time, that doesn't mean that I cannot place order every week. I can place order every week for that. So for most DCs which procures its replenishment from a different sourcing location, be it a vendor, be it a manufacturing location, they can have the option to place orders every week, and hence in 95% of the cases the PBR is 1 or which denotes 1 week. The only exception to PBR is in manufacturing location, wherein if you have production cycle, wherein as a production planner you might decide to plan product 1 every 3 days in a week or every 1 week. So in those kind of situation we can have a higher PBR, and based on the PBR the inventory optimization will calculate inventory, and higher the PBR, more recommended safety stock will be planned by the system. So these are two important things that we need to keep in mind while maintaining master data for IU. Next, the third most important attribute is what I called is the internal service level. If you see here, we have two fields called max internal service level, minimum internal service level. Now there is a fundamental difference between internal service level and external service level. External service level or target service level is basically inputted where we have a customer facing DC and we maintain a target service level at a product location and a customer group level. Whereas if you look into two different locations within a supply chain node, which sends product from one location to another and doesn't replenish a customer, although they don't have an internal service level, but they do have a internal service level. My bad. So if there is a customer, they will have an internal external service level, but if a source and destination is replenishing each other without the presence of any customer, then there is an internal service level that needs to be maintained. Generally, if you don't maintain this field, inventory optimization considers that across all my supply chain, my internal service level will be treated as same, which as a starting point is fine, but as you go deep down and gets your hands on with IBP and you become more proficient in IO, you might find that internal service level should be different at different components that lies at different level of bombs. So accordingly you can change your internal service level based on if a component is at level 1 bomb, level 2 bomb, level 3 bomb or level 4 bomb. So these are the few important attributes in the location product master that we need to be cognizant about while setting up an inventory optimization. Now with the product location done, the next most important master data is called demand stream or source customer group. It is nothing but a combination of product, location and customer group. Remember one thing, IO doesn't do planning at a customer level. It does planning at a customer group level. So in a customer master, you will generally get customer group, and based on that customer group and location product combination, you define this combination in master data, and based on this combination you define the TSL or the target service level. Now how this target service level is determined, again it's a business specific logic. Some business uses complicated logic to determine target service level, whereas some use specific very simple logic to determine the target service level. Here in this example, we have used a very simple method like as a part of the demand planning, we run ABC segmentation for a product and it ranges from A, B, C, D, E, F, G and H. So we have maintained a very simple logic that if a product is having a segmentation of A, then I will maintain a target service level of 0.95. If it is B, I will maintain 0.78. If it is C, I will maintain 0.75. Whereas if something is neither A, B or C, I will maintain a target service level of 0.5. A TSL of 0.5 means IO is not going to propose any safety stock recommendation if your target service level is 0.5. So the objective is I am maintaining safety stock for my ABC category segmentation of product. For all other product, I am maintaining it zero point 0.5 so that I don't want the system to generate safety stock. So that's the main purpose of this demand stream. Apart from that, there are two more master datas which are required once we go to the next level of the supply chain, and that is called location source and production source header. So if I go to location source is primarily used in supply planning in order to determine the T lane and the lead time. But along with the lead time, we also have an attribute called lead time error CV, or which is also called lead time variation. So the process on how we determine the lead time variation is a bit complicated process, wherein we look into all the purchase orders and the STOs between two locations in ECC. We take the creation date. Based on that creation date and the lead time maintained in the PIR or in the planned delivery time, we see what should be the tentative delivery date, and then we also check the actual DRGR date. Then based on these three dates, we do a calculation and see how much is the exact or the actual lead time that it is taking. If my lead time is 4 and after the goods received, I see that the lead time there has been a delay and it is 4 weeks, then that means I have a deviation of 0.5, 0.25. So that's how we populate the lead time deviation here to 0.25. Because at a thumbnail, at a high level, inventory optimization basically works on three variability. One is your demand variability, that is how accurate is your historical sales to actual forecast. Second is your lead time variability, that what is your actual lead time and how much it is really taking for you to get a replenishment of a product by doing a GR. And the third is production's lead time variability, that if my production start and finish date should be in 7 days, am I really finishing it in 7 days or am I taking it 8 days or 9 days? But those kind of calculation gets more complicated in nature. So generally we start with demand variability, and in most of the cases we also go with supply variability, wherein there is a case of multiple vendors where there is a delay in receiving shipment, so that we can capture those variability, and based on this three variability the system takes these three into account, and based on that whatever demand I have the system generates the safety stock or the safety days of supply that we should maintain for a particular location product at a particular bucket, in order to ensure that I am never in a stock out situation if some unforeseen changes happens. And unforeseen changes means increase in demand or delay in my supply line in terms of lead time or replenishments of goods. So this is all about the master data piece that I wanted to cover. Once this is done, I know that these are the primarily or the mandatory required inputs in terms of master data that are needed for an IO run. Now moving on, IO, as you know, is a tool that has been created initially by SmartOps and has been acquired by SAP. Inventory optimization runs on predefined key figures which we cannot change, which means I have predefined input key figures, I have predefined intermediary output key figures, and I have predefined output key figures that generally gives me the results. So if you see, we have a key figure called IO cells. This is the standard input key figure that IO understands that this is the key figure where I will have historical sales quantity which is used for multiple purpose. So any history that I have from demand planning, generally I copy it back to the IO cells where it stores the actual history. Now in many organizations, people cleans up the history of biasness and we get the cleaned history copied to IO cells. But there are organizations where they want the raw sales data to be updated in IO cells, and then based on that, they decide to do the cleaning, and there are methodologies for cleaning which I will come in the next chapter. Similarly, like IO cells, I have one more key figure called IO forecast. This is the key figure which is supposed to store the forecast not only in the present but also in the past. Because while I calculate demand variability, I need to look into the actual sales and the forecast in the past. And based on that, I generate the demand variability or covariance, which is then used as an input in IO to determine what should be my recommended safety stock based on demand variability. So this key figure that you see, we also generally tend to populate it from demand planning, from where we copy the forecast that has been generated as a result of demand planning and we load them both in the history and in the future. The purpose of the history is to help me determine the covariance, whereas the purpose of the forecast in the future is to look into the future forecast and based on that generate a recommended safety stock. So these are the two primary inputs that are very important and required, and based on this input and some other master data inputs that I have showed you, and there are few more additional inputs which I will come later. Based on these two input, the system generates something that is called recommended safety stock. This is the output key figure. So if you see, this is the output recommended safety stock from inventory optimization. So based on all these criteria, it generally calculates and tells at a particular product location combination and at a particular weekly bucket, how much safety stock should I have in order to ensure that I am in a position to meet the target service level that I have set for a particular product location and customer group config combination. So this is at a high level how the inventory optimization is working. So this is what I wanted to cover in this part of the video. In the next video, I will cover what are the different types of variability that safety stock takes into account, with few use cases how the variabilities are determined based on company's requirement, which varies from one company to another, and based on those variability how the safety stock runs. And we will also cover certain aspect of how to configure a inventory optimization profile and what are the output of these profiles. So this is all what I wanted to cover as a part 1 of the video of inventory optimization, which is to give you a basic understanding of the mandatory master data that you look for, what are the primary input key figure, and based on those primary input key figure, what are the outputs that are generated by the inventory optimization. So recommended safety stock is just one of the many output that IO gives. There are multiple outputs that IO gives both at a finished product and at a component level, which we will see in the coming sessions. So that's all what I wanted to cover in this video. Thanks a lot, and thanks a lot for your patience for watching this. If you like the content of this video, please feel free to subscribe and register to my channel. Thank you.